Analysts suggest that Hindustan Construction Company (HCC) is now well positioned to take advantage of the 1.5 lakh rupees crore nuclear opportunity. The company's efforts to clean up its balance sheet over the past decade have paid off, reducing its peak debt from 6,200 crore rupees in FY22 to nearly half at 3,400 crore rupees in FY24. Elara Capital also supports this view, stating that the company is on the path to regaining its former prominence, with projected order inflows of 9,000 crore rupees. HCC shares have soared approximately 33% over the past week, marking gains in 6 consecutive sessions. During this time, the stock has achieved several record highs, including a new peak of 51 rupees and 18 paise on June 12. The stock's surge is driven by optimism about the company's potential revival under Modi 3.0, following a decade-long battle with heavy debt. On June 12, shares of Shipping Corporation of India soared by 7.5%, driven by investor enthusiasm as the company approaches divestment. In March, SCI's non-core assets were spun off and listed on the exchanges under the name Shipping Corporation of India Land and Assets, managed by the Ministry of Ports, Shipping and Waterways. A senior government official indicated that the strategic sale of Shipping Corporation of India is expected to advance without further delays, following Maharashtra's approval of a stamp duty waiver. Without this waiver, which is around 300 crore rupees, the divestment process could have faced significant obstacles. The official further noted that the divestment had been postponed due to the general elections, which are now over. This demerger and subsequent listing have paved the way for the next stage, where the government will seek financial bids for the strategic sale, anticipating revenue of around 3,000 crore rupees. The surge in global battery factory construction is poised to surpass demand significantly. Manufacturers' announcements of new factories have led to a capacity that will outstrip demand for the rest of the decade. Although the demand for lithium-ion cells is rapidly increasing due to automakers' transition to electric vehicles and utilities deploying large batteries for grid stability, this oversupply presents challenges for new entrants in the battery industry. By the end of 2025, the global battery industry will produce over 5 times the required cells for that year. This oversupply issue is particularly pronounced in China, where manufacturing capacity is expected to exceed battery demand by more than 400% throughout the decade. Similarly, in the US, President Joe Biden's focus on establishing a domestic battery supply chain is critical. As part of these efforts, the administration offered Ford Motor Company a conditional $9.2 billion loan last year to build 3 battery factories. Ola Electric, a prominent player in the electric vehicle sector, has secured SEBI's approval for its upcoming initial public offering, with the aim of raising 7,250 crore rupees. This milestone positions Ola Electric as the first Indian electric vehicle two-wheeler manufacturer to embark on an IPO journey, with the company having submitted its draft red herring prospectus to SEBI on December 22, 2023. Ola Electric has engaged Kotak Mahindra Capital and Goldman Sachs for its IPO. The IPO comprises a fresh issue of 5,500 crore rupees and an offer for sale of 1,750 crore rupees, totaling 7,250 crore rupees. Existing shareholders plan to divest 95.19 million shares through the OFS, with founder Bhavish Agarwal intending to sell 47.3 million shares, while initial investors like Alpha Wave, Alpine, Dig Investment, Matrix and others will collectively sell 47.89 million shares. That's all for the moment. Thank you for your time. For continuous updates on market activities, please follow our channel.